In this presentation, we will add a personal checking account to our personal QuickBooks file and add the beginning balance to it. In other words, when we first set up our personal QuickBooks account, we need the checking account and we need to know what that beginning balance will be. We're not going to go back in time and enter all the data we've had in our checking account throughout history. We're going to draw a line at some point in time and we're going to enter the beginning balance as of that point in time and start tracking here going forward. And that's one of the things that really confuses people oftentimes. How do I get this point set up to be correctly? Once done, then I think I can move forward well entering the data. However, a lot of stuff has happened in the past in terms of my checking account. What do I do about it? Well, what we do is we draw a line and we enter the data as of a certain point in time. We do what we have to do to make things right as of now, and then move forward from there and enter the detail from this point forward. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here's our home page. We currently have the open windows open. In order to open the open windows, you go to the View drop-down and select the Open Windows list. We've set up our personal account now, and now we need to go through and set up our checking account, and then we can start to add other accounts as we enter data. To do that, we're going to go to the Lists drop-down up top, and we're going to go to the Chart of Accounts. Here is our chart of accounts. Now, we told QuickBooks we're not in any industry, and QuickBooks still gave us the basic accounts. This is like the bare minimum that QuickBooks says. QuickBooks says, hey, you're not in an industry. We won't give you an entire chart of accounts. You can create all of your chart of accounts, but we can't resist giving you at least these accounts to help you start out, and that's okay. So we've got the equity account because we're sole proprietor, and they gave us payroll because probably, even though we don't have payroll, they probably want us to buy it. So they set that up today. So we have those, that's all we have. Then we're going to set up everything else. And note over here, it's going to be in order by the type. And so all we have is equity. We've got no assets this time, which would be up top. And then we have the expenses and no income accounts. Don't worry, we'll set those up as we go. And it should make you feel good that it's nice and clean like this, because now we can categorize our accounts any way we want. And typically when we do that, we're really focusing on the expenses usually, because we're trying to see who we paid. And then we want to know how are we going to group these expenses to give us the information we want. We'll discuss that, and we can put that together just as we start entering checks into our system. We will do that directly from the bank statement. But first, we'll need a checking account. So we're going to set up our checking account first. To do that, we're going to go down to the bottom where it says Account down here, and we're going to say this is a little drop-down arrow, but if you click on it, it goes up. So that's the drop up, we call it a drop-up arrow, and we're going to go to the New Account. And it's going to be a bank type of account. So we want a bank type account and then continue on the bank type account. And I'm just going to call it checking account. So it's just checking account. And if you have multiple accounts, you might want to put like the last 5 digits of the account number or something like that in order to differentiate. If you want to put the name of the institution, that could be helpful as well. But if you just have one checking account, it's pretty clear that that's the checking account. So we're not going to put any other information. That's all we need. And we're just going to say save and close. Oh, also note before I close here, sorry about that, we're not going to be putting the beginning balance here. And the reason is because if we use that, then QuickBooks will put the other side to either an account they call opening balance equity or an uncategorized revenue account. Either of those two accounts are like nonsense accounts. We don't really want to do that. So QuickBooks is basically saying with this item, you know, if you don't know how to do the journal entry thing, then you can just put the beginning balances here and we'll do something funny to make it work. And that's fine. So we can use that, but I would rather avoid the funniness happening and just enter it directly into the register. So that's why we're going to use the method we will use instead of using this enter opening balance. So in other words, again, if you put the opening balance, I'm going to click on it. If you put the opening balance in here, it's going to make a journal entry. The checking account will be right, but it'll make some other account. And I'd rather choose consciously what that other account is. That's why we're not using this. All right, we're going to close this back out and then save and close. And we're not going to buy any checks. Okay, so now we're going to go into the check register and enter our beginning balance. So to see where that comes from, we're going to start entering data as of January of 2020. That's just when our problem is going to start. And so what we need, I'm just going to get the bank statement for that date, for the month of January 2020, and I'm going to see where we started, where was the beginning balance. So if we get our bank statement here, we're going to say, okay, here's our bank statement. There's the beginning balance, 3,210. That's where I'm going to start. I'm just going to start right there at the 3,210 and move forward from there. So I want to get that beginning balance in place then. So I'm going to go back to our account. I'm going to go into the register. This is where we're going to use a cash basis method. We're just going to enter things directly into the register. So I'm just going to double click on this item. That'll take me to the check register. Here's the check register. Nothing's in it. Now remember, we're going to start entering our data as of January 2020. That's just the year that we picked to enter data. We want anything funny happening right before that. I don't want anything funny happening in that year. Anything we got to do to kind of make things work to make our system correct as of a point in time, January 1st, 2020, I want to have done before that. Therefore, we're going to put this in as of 12/31/2019, the day before. So 12/31/2019, day before the January of the year we will be working with. Okay, so it's going to be a deposit. And now note, we're not actually depositing money into the bank, obviously. It's just what was already there before we started tracking it. But we have to record it as a deposit because it's an increase to what is currently in the account, which is nothing. And so the amount was, once again, 3210. It's easy to remember. 3210, okay. And then the other side is going to go to the equity account. So this is probably the most confusing component. Why does it go to equity? Because that's kind of like the other side, the balancing side. And there's no way to get around that, really. I mean, you could try to use the opening balance. We have to know that there's two sides to an account. So just because it's personal and not business, the rules are still kind of the same when we enter anything. So the other side has to go somewhere, no matter what software we use or what, however it works. So we're going to have to say the other side is going to go to equity in this case. Now, once we go forward, everything else is probably going to be an expense account for the most part, and that'll be easy because everything will just be going increasing or decreasing cash, and it'll either be expense or revenue for the most part. But when we first start, we got to do this, and this is just going to be, we could label it in the memo, opening balance, just to put that in place. And then, okay, just make sure you hit enter. Now, it'll give you a warning. I'm going to paraphrase the warning. QuickBooks is telling us, hey, you're doing something to retained earnings, which is a retained earnings type account, equity type account, which you don't normally do, and you don't normally do it. We won't be using that account much going forward. However, it will be used by QuickBooks to roll out net income to it. So it's going to say, do you even want to do that? We're going to say, yeah, let's do that. And that's it. So now let's just take a look at our report so far. All we have is, if we go to the reports drop down, we go to company and financial. We're going to go down to the balance sheet standard. And let's change the range up top from 01/01/19, the day before, to 12/31/19. We're going to be working in 2020. So January 1st to December 31st, 2019. We'll be working in 2020, okay? But we set this up as of the end of 2019. So if I double click on this, then I really only needed one day there, the 2019, but it gives us the activity, and there's our activity. If I double click on it, it'll give us our transfer form. Sometimes it'll do a deposit when we put a deposit in, but this is just a form that QuickBooks uses. It's the same data we put into the register, so don't let that throw you off. If you wanted to change it, you can go to the register. You don't have to go to this form, but it'll give you that detail of what we've done. Closing this back out, closing this back out, and the other side is going to equity. And this just means that who owns that money? There's no liabilities. It's owned by the owner, the equity owner, which is us, the household. You can think of it as this time, since this is our personal account. Now, if we go to the next day, we're going to start in January 1st, 2020. And now that amount is already there as of the first day. That's the point. And there's in the equity, and there's nothing in the profit and loss statement. So no income or loss has been recorded. That's just our starting point. And then we're going to start recording profit and loss, revenue and expenses going forward from here. For more accounting information and accounting courses, visit our website at accountinginstruction.info.